So that probably means there's going to be a cost component, because if one is permanent and one goes away, how are these things structured from what I got to pay to get the same type of coverage?
All else equal, you'd probably say, no, I want the permanent stuff, right? Like, I want to make sure that's there if all else was equal. But unfortunately, all else is not equal, because when you look at the cost of these two types of insurance, they are vastly different. Look at this. Now, we're just looking at a specific type of permanent life insurance called whole life insurance for this example. But look at what the annual rates of this insurance is for a healthy female in excellent health if she wants to have a $500,000 death benefit for a 30-year-old. She can go out and buy a term policy at 30 years old for $188 to have $500,000 of coverage in place. If instead, though, she wanted to go buy that same amount of coverage, but buy a permanent life insurance policy, a whole life policy, she's going to spend over $4,000 a year for the exact same amount of coverage.
Now, there's a difference. Typically with a term policy, like on a 30-year-old like this would be for a 20-year level period.
Yep.
Now, look, if you have a child that was just born when this person was like 28 years old, and now by the time this person gets to 50 years of age, that child will probably be graduated college, and hopefully they'll be financially independent. It will be completely fine that this insurance goes away. But I got to tell you, this is the thing that when I see the pricing, because when you look at 30-year-olds, 40-year-olds, it is like a 20-fold difference in what the annual premium. And I just know when I was in the messy middle, I had, it seemed like everything in the world was trying to get to my back pocket. You know, whether the kids, me trying to save for retirement, there's just so many things going on. The fact that if I had to save $4,000 a year to pay my life insurance premium versus $188, I don't think I could do it. So I would just be sitting there naked on the exposure to my family, whereas at least term allows me to cover the need, but then invest some of that money above and beyond that for the future, so I can actually build financial independence above and beyond.